Hello, best of your listeners, and welcome to the best real estate investing advice ever show. I'm Theo Hicks, and today we'll be speaking with Matthew Ryan. Matthew, how are you doing today?
Doing great. Doing great. How about you, Theo?
I am well. Thanks for asking, and thanks for joining us again. So, Matthew was previously interviewed by Joe on episode 1593. So make sure you check that out to learn more about his background. Today is Sunday, so it's Skill Set Sunday. So we're going to talk about a specific skill that Matthew is focusing on and how you can apply that to your business. And that is going to be co-living. Before that, a little bit about Matthew. He is a social entrepreneur, founder of Re-viv, which addresses the market inefficiencies in community revitalization efforts. His focus is on multifamily value add, multifamily co-living now, as well as the development space in distressed areas. As I mentioned, previous episode is episode 1593. He is based in San Francisco, and the website is re-viv.com. So Matthew, before we get into talking about co-living, could you tell us just a little bit more about your background and then what you've been up to since we last had you on the show?
Yeah. So my background was in the energy efficiency and green building space, specifically focusing on how we can make residential and light commercial buildings more efficient. Back when I started the business in 2010, this was a blossoming industry. And I ended up taking that skill set that I learned, this kind of comprehensive knowledge of building science and how we can build more efficient and advanced structures, and dovetailed that into community revitalization and, essentially value add and investing in development.
And then now you're doing the co-living, right? That's your focus now?
Yeah. And I think when we spoke about, or you actually, I think, did the last episode, just to let those listeners know. So we were talking about opportunity zones back then, and that was actually around that time that we launched our opportunity zone fund. And the primary focus was co-living, was to kind of overlay this blossoming industry with this now extremely advantageous tax deferral strategy with op zones. And so we launched our fund. We raised about $1.5 million to $2 million in capital in the early part of 2019. I spent the rest of the half of the year trying to place that capital and got a little tripped up. We had a lot of difficulties. As everyone knows, we were very much at the top of the cycle, but here we are back at it again.
So I've actually I've never heard of co-living applied to real estate before. So this is going to be very new to me, which is going to be good. Yeah. I can ask you questions as a complete noob. So, so you said that the kind of the strategy is using the Opportunity Zone Fund, and then the properties that are developed, those will be co-living spaces, or are these two separate things?
Yes, no, that's you hit the nail on the head. And then, as you know, with Opportunity Zones, the majority of Opportunity Zone investments are development. We started in the value add space, so we've kind of created a hybrid, looking at adaptive reuse, converting empty warehouses in districts in Oakland and Berkeley that could be converted into co-working as well as co-living. And then also taking a single family home, right, and an empty duplex, triplex, quadplex, and utilizing the existing zoning. We're looking at lot sizes that are much larger, where there's available footprint and expansion. And in the early part of 2019, there was also an advancement in California law that allowed us to add up to 2 ADUs. So we're actually able to...
Sorry, what's ADU?
An ADU is an accessory dwelling unit. And so it's a granny flat. And so what it's allowed us to do is basically take, say, a traditional 2,000 square foot home that may have 3 to 4 bedrooms, right? And expand the footprint of that building up to 4,000 square feet and getting up to 12 bedrooms. So we're actually increasing the density between 200 to 300%. Mm-hmm. And in the context of what co-living is, and I know you want to touch on that, think of it as college-educated 22 to 35-year-olds who are struggling to find an affordable place to live, right? But they want to live close to a major metro where the high-paying jobs are, right? It sounds familiar. I'm sure some of us have experienced, or we've had friends who've experienced it. And, what's traditionally happened is those roommates have been bunking up in 3 and 5 bedroom homes, splitting the rent, figuring out how they're going to, but then you got to finish out how you're going to furnish it, right? How you're going to split the utility bills, who's going to clean the toilets, who's responsible for the dirty dishes. And so the best way to think about co-living is it's monetizing an already existing marketplace. We call it the Craigslist marketplace, right? Apartments.com, so on and so forth. And, it's really just kind of capitalizing on this roommate situation, but adding degrees of efficiency, right? So someone wants to rent a room. They don't have to worry about getting a bunch of roommates together, putting a big deposit down and taking that risk. They can simply hop on their smartphone, go to some of these co-living platforms and look and see what inventory they have available, schedule a viewing, go and meet the roommates and plug right in. So it's a really kind of, it's a turnkey strategy for people who are new to a city, again, looking for an affordable place to live. They want to be in these desirable areas, but they're really struggling to find a place. And, that's the simplest way you could break it down. And there's all different shapes and sizes of co-living developments now. Developers are now integrating them into their mid-rise to high-rise developments. But that's really the best way I could describe it. It's
Sure.
not, this isn't, and then of course you're sharing furnished areas and common spaces. So it's not like a true apartment. But it's really for those people who, want an affordable place to live. The typical rents in a co-living are anywhere between 15 to 25% below the market rate rent of a studio. So.
Okay. So, let's go back to, so I guess let's start from the beginning. So if I'm a developer and I want to develop a multifamily house, a multifamily, building with co-living. So is there I guess my first question would be, is the actual unit going to be different? Like, do I need to develop a different unit for co-living, or is it the same unit as before?
Yeah, typically you're going to see higher bedroom counts. So a traditional multifamily developer, he'd have a 1 to 3 bedroom unit, right? Most of these units are going to be anywhere between, and if they're set up in the development space, they're set up as pods, right? So anywhere between 4 to 6 bedrooms sharing a large common space. So you're seeing a little bit bigger footprint, which you traditionally didn't see, right? And a little bit more sharing of common space, but in lieu of that, where sometimes you're using an old Victorian or an old house, that had crammed up common spaces. These guys are actually expanding common spaces, expanding now offices post-COVID where people can, have a place to work from home. And they're even integrating in them to their bedrooms as well. So did that answer your question?
Yeah, it did. So,
Good.
So this is a development strategies, but also, I essentially lived I lived in a house in college that had like 13 bedrooms in it, I think. So I think it's kind of like there's so it can be a brand new development, or it can be taking an existing, as you said, Victorian type home that has a ton of bedrooms, and then turning it into co-living. So that totally makes sense. And so if I'm developing an apartment, right?
Mm-hmm.
Is it something where I'm developing just like one, or would there be like a 100-unit apartment that has a percentage that are co-living and a percentage that are regular, or would it be all 100 units co-living?
Oh, sorry about that.
No problem.
Yeah, let me turn this off real quick. So both is a short answer. People are also taking 4 and 5 bedroom units apartment complexes that have larger living spaces, common areas. Okay. Maybe they've got a formal dining as well as a kitchen, and converting those extra spare rooms into bedrooms now, so you had a 2-1 with an extra large space, you can get extra bedroom in there. That's one way of working at it. You've got to be careful depending on, you don't want to create a crammed space. ground up developers, yeah, they're basically taking, you know, again, a 4 to 6 bedroom, sharing common space. They can start from scratch. Our strategy is typically taking these larger Victorians, these larger historical homes that have a lot of common space. Again, formal dining rooms, maybe 2 living rooms, finding ways to convert them, but then also expanding the footprint of the building. Sometimes they have an illegalized basement, so we'll put a new foundation underneath it, expand the basement. The ADU law allows us to add up to 1,500 square feet additional, right? So we're kind of doing a value add strategy plus adding development, adding square footage, which again allows us to increase our bedroom count, squeeze a cash on cash return out of an otherwise not cash flowing asset, and again, and provide a much superior product to those guys who are out there and gals who are out there just trying to rent on Craigslist and do the buddy up system.
When you're expanding, is it expanding kind of like horizontally, or do you expand vertically too?
Wherever the lot will allow us, and we can get setbacks. You know, and the nice thing about the ADU law is, you know, typically residential zoning, you'll have, say, maybe a 10, 15 foot setback, right? Well, with the ADU law, you can do it right on the back lot line now. So you don't have to work about those setback rules, which is really, really nice, because a lot of these Victorians are built on these very large, you know, 5 to 6, 7,000 square foot lots that are, you know, practically unutilized, right? You could fit almost another house there if you wanted to, if the current planning and zoning would allow you to. And that's where the ADU laws come in and help us kind of expand that footprint.
Perfect. So then my next question is going to be about, I guess, where these types of properties are in demand. And so can I do this anywhere, or do I need to find a very specific type of, I mean, you kind of got into this a little bit, but I guess a little more specific, like what's the what are the characteristics of the ideal market for co-living?
You know, it's funny because I thought that definition was very defined to what we're doing, right? Which is extremely supply constrained markets with very high, you know, barrier to entry, high rents on a 1 bedroom. San Francisco, now Oakland, which I think is now the 4th or 5th most expensive metro in the US, the New Yorks, the Bostons, the LAs. But, you know, just the other day, I met a co-living operator who's now taking, you know, 4 or 5 bedroom house in the suburbs in Charlotte and converting that into co-living. And he's seeing very strong demand, getting great cash on cash returns, and doing a fantastic job building a portfolio. So, you know, I think, again, it's from a product in a geographic area, I'm seeing that definition continually expand. You know, most of what we think of in co-living is high density urban areas, expensive markets. But again, we're seeing success with other operators who are moving into suburban markets and, you know, in an already somewhat affordable market like Charlotte, out in the suburbs. And he's obviously seeing demand for his product. So, you know, there is no right answer to that question, to be honest, because again, we're constantly seeing this idea of co-living evolve and people, again, just monetizing on that existing model, but providing, you know, alleviating those pain points, right? Because normally if you're gonna rent a house and then get a bunch of roommates, you're gonna become the master tenant. It puts a lot of burden on someone who doesn't traditionally have property management experience, right? And I remember from our conversations, you've been through the hells of property management, right? So it's not an easy game, and it creates a lot of tension. And so I think what a lot of these operators are doing a very good job is not only are they taking that burden away from someone, but they're also adding in community events. You know, they're also adding in value to those individual tenants. And I think that's really interesting.
Mm-hmm. Okay, perfect. So maybe, so how does if I own one of these, how does this leasing process work? Like, how do the leases work on this? Is it an individual like lease per, like, do I have a lease per room and then I'm charging per room? Or, I mean, I think I mentioned it's not going to be like one person is this one lease, one person, then that tenant collects the rent from everyone else. Like, how does that work?
Yeah, it typically is a master lease, and then you're subleasing individual rooms, and that's As far as the larger developers, you're traditionally going to have probably a professional management company in place. And again, they're signing individual leases for the rooms.
So the person who owns it, is he the master lease person? Or is one of the tenants the master lease?
Well, typically the property manager, let me back up. So even on the smaller developments, we're instituting professional property management, which is technically the master tenant.
Okay, got it. And then you mentioned before about like co-living platforms. And
Yep.
So, I mean, again, you said it's the Craigslist, capitalizing on the Craigslist marketplace.
Right.
That's kind of what I thought about. And I know Joe, when he would live in New York, that's how he found a roommate, was on Craigslist. And so I know people are doing this already on Craigslist, but are there specific platforms for co-living?
Yeah, and when I say a platform, fancy word for, a co-living operator, a property manager, right? But when I'm talking about platforms, they're instituting these technology platforms, where someone's not just going to their website and here's a contact number, call me and I'll set up a apartment viewing. These guys are going so far as they're creating 3D models of the internals of the building, especially since COVID, especially the ones that are VC backed. They've got mobile apps where people can go on there and check inventory. They can scroll pictures of the rooms. They can set up a leasing on their phone. So they're really just taking this a step further and literally building a platform for people to be able to communicate with them, very much like, the high-end multifamily leasing companies do. So the level of sophistication that they've instituted is what I mean when I talk about a specific platform.
I see what you're saying. So it's not like a Craigslist for co-living. You're talking about like this is the specific, like your company would have these technologies that the renters can use to have an understanding of what's available. Just like if you go to a professional property management company site and it says, here's all the available units we have for rent. And then you have that, but it's a lot more. And so it's as much detail with the models and as those. Is that what you're saying?
Correct. And we want to distinguish that there are developers who are vertically integrated in providing the property management in-house. There's very few that I know of who are doing that on, developing co-living assets as well as managing. But it's typically the property manager who's offering those platforms and services for the tenants to be able to go there and check that out. As a developer, we're not. We're just simply developing the assets and doing like every developer does, turning it over to a property manager who specializes in co-living, and then have their degrees of, setting up their own platforms for tenants to be able to view and check out the apartments and lease and all that fun stuff.
So after you develop, do you are you selling them, or are you just the management company is managing them and you're still getting the income from that?
Yeah, our strategy is and probably will be to hold over the long term. The reason behind that right now is there isn't a lot of comps for co-living, right? The debt market is starting to approach co-living differently since COVID. So I really don't think it's advantageous for anyone to be trying to, develop a co-living asset and then turn around and sell it. I think you're actually going to lose a little bit of value in the marketplace until we start to see this make its way up through the chasm, through the adoption cycle. And it becomes more familiar. It becomes more of a regular part of multifamily, which every industry expert has agreed it will be. Like, this is a permanent segment, but there's still some trepidatiousness and there's still a lot of unknown in this marketplace. So that's not only our motive. I mean, we're traditionally a long-term buy and hold value-add investor, but that has also solidified our desire to not only develop assets, but to hold on to the long term. Because quite frankly, we think over time, people they're going to see this, 15 to 25% net operating premium that we're getting on a co-living development versus a traditional multifamily. And we think that those assets are going to essentially be worth more. Mm-hmm. But right now, you're not really getting that value. That level of value is not really being appreciated in the marketplace.
Well, that totally makes sense. And so now, again, on the front end, how is like the underwriting process? So I'm not the due diligence, but like before you're submitting an offer on these properties, how are you? I mean, high level, coming up with the purchase price. And so basically, how do you know what rent you're going to be able to get, and then how do you know the cost of the rehabs?
Yeah. Yeah. So we've integrated with a very strong architect, and integrated architect and general contracting, fancy term, design, draw, build company. That's actually their name, excuse me, but a design build company, general contractor. So they can really help us navigate the nuance of the development, the entitlement phase, which is very short, as well as the construction. So that makes it really easy from an underwriting perspective for us to be in constant communication with them when we get a property that are generally all the same, but again, they all have little nuances, right? And so that's been a key portion of our underwriting. The second piece is it's extensive. So we're looking at a couple different things. There's now enough inventory that we can go out to other co-living operators who have assets on the ground and see what they're charging, right? Which is very traditional for multifamily. The flip side of that is we're literally going to the Craigslist roommate section, and as well as Craigslist listings for 2, 3, 4, 5 bedrooms, and saying, okay, if we were to split this amongst all roommates, what would be the price per head? Okay, what's the average rent for a roommate? So you really kind of have, and we just did this for a property that we're under contract on right now, where you literally have 3 levels of consideration, okay? And just like in the multifamily space, now you have to look and see, okay, my roommates are around, say, $1,500 a bedroom. If someone were to split a 3-bedroom, that comes out to around $1,550. But my co-living operators, who are fully furnished, very high-end product, very well developed, they're more $1,700 to $1,750. So where do I land in all this, right? You have to make that determination based on the product that you have available to you, what finishes you're going to institute, right? And also trying to keep up with how much supply is out there in that marketplace. So when it comes to underwriting, those are kind of the 2 key components, just like any value-add investor, right? Your construction costs and your rentals. We will typically, on an in-the-door basis, we'll look at a company like Rentometer, who's aggregating listings, and we'll just say, hey, the studio rent is $2,000. We know we're going to have to be between 15 to 25% below that. Let's benchmark it at 20% underwrite. And that's how we'll evaluate the deal as it comes in the door. The process I just described is obviously once we're getting a property, either we've submitted LOI or, we submitted a purchase sale agreement, we're starting to get the feeling that the deal is going to maybe go under contract. Then we'll start doing that extra leg of due diligence. And that's kind of the extensiveness of our underwriting process. It sounds very simple, but of course it's fairly complex. And of course we spend a lot of time building our pro formas up to where we can, with our own in-house metrics, to be able to quickly analyze these deals. We've gotten to the point now where these smaller co-living deals we can underwrite in 45 minutes.
Yeah. Something I didn't even think about. You might have mentioned it before, but it's just clicking now. And so when you say furnished, you just mean like the common areas need to be furnished, right?
Correct.
So I mean, again, this is super detailed, but I mean, are you putting in like silverware, or who buys the silverware? Who buys the towels? How does that work?
I think, that's a great question. Towels, I'm not sure of. I think you got to bring your own, especially in the days of COVID. But yes, traditionally, all the furnishings, all the kitchenware, all that stuff is there for you. Okay. Again, they try to make it as turnkey possible. And there's also operators who are going out there and furnishing their apartments. Some people have differing opinions from a liability perspective, from a tenant preference, but the majority of the operators that I know, very high-end finishes. Some are even instituting interior designers to come in here and make these spaces, much nicer than the places you and I probably lived in coming out of college.
Seriously.
Yeah, right. And so the level of detail there is great. And yeah, most of that stuff is just well finished, and everything's pretty much supplied and stocked and ready, all the way down to toilet paper and those type of things, because they're all of them have their own cleaning plan. They all have their own cleaners coming in and cleaning the place regularly. So
yeah, no, I can definitely see that there's gonna be a lot of demand for this in the future for sure. 100%. Yeah. So, all right, Matthew, is there anything else that you want to mention about this strategy, about where people can learn more about you and your company before we sign off?
Yeah, I would just like to say that there is still a lot of degree of doubt in the co-living space, especially with COVID. And we've seen this, just in the last 2 months. And I would just like to remind your users let's rewind. Let's go back to say March, or even further. Let's go February, January, December of 19, right? And think about the world that we lived in prior to COVID, right? Because we're also seeing this in this, everyone's moving out of the urban cores, everyone's flying to the suburbs, right? And there's a lot of doubt being sown in the co-living space. And for me, it's a very simple, just go back to the world that we were in before, right? Where 72% of all the jobs created out of the last recession were in metros over 1 million people, right? There was a reason why people were flocking to these job cores. And I think there's a reason why people are going to be flocking to them in the future. And once we have a vaccine developed and we've moved past this, I think a lot of the concerns are a little bit, they're founded, but they're a little unfounded. They're a little irrational in the co-living space. I challenge people just to think about that the pandemic is a temporary situation, and co-living is very much, in my perspective, a long-term trend.
Perfect, Matthew. It was great catching up, and thanks for going in a lot of detail on this co-living strategy. And so we talked about some of the advantages from both the kind of the operator developer's perspective, as well as from the renter's perspective. We talked about kind of the strategy. Like you can develop a new property and turn that into co-living. You can find one of these big, as you mentioned, what your company specializes at, these big single family Victorian homes with lots of rooms and common areas. You can buy something and expand upon it horizontally or vertically. So there's really a lot of different options you have for the type of property you can buy or create to do this. You also talked about the market and how you thought that initially it would be the kind of the high density urban areas with really high 1-bedroom rents with very low supply, but then you heard of someone who's doing it out in a suburban area, and so it kind of really, there's really no specific definition for the market. It can really work anywhere. Maybe a good thing to do would just go on Craigslist and see how many people are looking for roommates. You mentioned that you also talk about the underwriting process and how it's kind of the way you're approaching the construction costs is partnering with kind of a company that specializes in design and building, and then for the rents, depending on where you're at, right? If you're in one of these high density urban areas, it might be enough inventory to do the traditional rent comps. If you're not, then you can go on the roommates section on Craigslist and kind of calculate comps that way. Go to Rent-A-Meter, take a look at the studio costs, and then kind of reduce that by 15-20% and do it that way. And then you said a lot more. That's just all I got in my notes. So definitely worth a listen. And then at the end, you mentioned how there are doubts around co-living, but if you go back to this time last year, I'm sure everyone thought this was the best idea ever. And so this is the situation we're going in now is temporary. I think this is I can totally see this being a huge thing in 5 to 10 years, especially with people coming out of school, right? And you're moving someplace and you don't know anyone, right? Like if I moved somewhere and I didn't know someone that lived there that I could live with, I probably would have gone on Craigslist, right? Or done something like this. So, Matthew, again, appreciate you joining us again today. Best of listeners, as always, thank you for listening. Have a best ever day, and we'll talk to you tomorrow.